I don't know. I mean, there's a lot of good things about the liquidity, the fact that, you're able to get in on tighter spreads because there's so many more trades. I saw a stat the other day that in 1 year, the amount of trades in the stock market, I think it was...
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
Welcome back. It's Walter, and I'm here with Darren. And Darren, today we're going to talk about the trading algorithms. These trading algorithms usually make the news every time there's a big move in the markets. And we're just wondering, Darren, if we can get your opinion on what do trading algorithms do for the markets? Have they changed the markets? Do they make it more difficult on the little guy? What's going on, and what are your opinions about these algorithms?
Yeah, I mean, I'm not really an expert on algo trading, Walter, but there's like a few little stories that I've sort of latched onto that make sense to me and the way that I trade. For me, the big one is the Black Scholes model, which was Myron Scholes, who won a Nobel Prize for he kind of worked out a way that you could eliminate risk in the markets by some sort of dynamic hedging. And basically it was like some intense mathematics, like some really, clever stuff. And, then he went on to start this hedge fund, and obviously everybody wanted to invest in it, and they were using this model. And of course they made loads of money, absolutely loads of money, and everything was brilliant, and, there was no risk at all. And then there was like an unexpected event, and they lost a load of money. But, they redid their calculations, and I was okay, we just keep going, and it'll all come out in the wash, and it'll be fine. And then there was like another unexpected event, and then, within, I think it was like 4 months, they'd lost like 50 billion or something insane, and they nearly brought the whole bloody financial system of the world crashing down. And, what's important for me to take from this is this fact that you cannot remove uncertainty in the market by trying to quantify it. And that's what I believe in 100%. So, although you can, build an algo that will be profitable, you can't change the fact that the market's always going to be uncertain. So I think really it's a level playing field. Basically the market for them is the same as us. It's something uncertain, and so, if anything, really, we've probably got an advantage over there. Because, it's what we believe that's important. And if we believe that we can remove the uncertainty and we can't, then we're going to come unstuck sometime. But if we're aware of that uncertainty, we can better manage our risk. And really, that's the only thing that we have control over. So, that's my kind of view on algos. What's your take on it?
Just hearing you talk about it reminds me of the idea of asteroid hitting the Earth. We can calculate the probability that we're going to be smashed by an asteroid and go the way of the dinosaurs, right? But that doesn't really remove the threat of the asteroid slamming into the Earth. In fact, if you pay attention to astronomy, you'll hear these stories about, here comes an asteroid and it's going to make a near miss again, and we didn't even see it until a couple weeks ago, or, these sorts of things. So clearly there's the risk out there, and the scientists are aware of the risk, but they still don't necessarily see it coming, if that makes any sense. It just popped into my head when I heard you talk about this, because I think it is kind of a parallel idea. This idea that if we can quantify risk, so I have a 0.335% chance of risk of ruin for my account, so therefore I feel better about trading this system, or whatever, with these given parameters. So it's like a soft thing to lie down on when you can quantify risk, isn't it?
Yeah, definitely. And I think, ultimately, we all start out with this kind of idea that the goal is somehow to remove the risk. And we kind of believe as well when we talk about algorithmic trading that it's some way less risky than discretionary trading. But essentially we're all trading the same market, and it's all controlled by humans. So really you'd have to kind of go down this efficient hypotheses thing as well, where, everything's already priced in. The news comes out and price corrects instantly, and there's no kind of room in the market for slack. I heard a bank trader talking about the algo part of their operation, and he was saying that they still need someone to go in there and make an assumption about whether the market's going to be trending or ranging, and then set the algo off doing its thing. And I think it's completely true. I mean, we're all basically at the mercy of the market. And if you want to be the sort of trader that says, okay, when A, B and C happens, then I have a 70% chance of winning, and if I place my stop here, this is the ideal place and my exit will be there, and you want to have it all predefined on what's happened before, then maybe algos are going to affect you, because that uncertain movement in the market, when you zoom in so close and try and be so quantify it to an nth degree like that, then you're going to keep coming unstuck. There's ways we can use as discretionary traders to make it not an issue for us.
Yeah, exactly. I think there's this sexy sort of technology is sort of this thing that we look at as a way of improving our lives. And so as traders, especially traders who are sitting down and really doing the hard time in front of the computer, they might see an algorithm or a robot as a way out or an easier way. Sort of like, we've got one of those vacuum robots. You just let the robot go, you turn it on, and then you leave the house and you come back and your place is vacuumed. You know what I mean? So, and that's kind of, I think, how people look towards technology is technology is supposed to help us. But I think you bring up a couple of good points. Number one, and this is what I've always argued, is that when traders come to me and say, look, I'm going to turn this into a robot and that way I don't have to worry about it, my reaction is, no, you're still going to worry about it. Even if you are trading an EA, you're the one that turns it on and off, and you're the one that babysits it, and it sounds like that's the same thing the banks are doing. So, one, it isn't totally, completely like a robot that's sitting off in the corner trading for you. Two, with these algos, I think that the thing that really it may affect is more the velocity of the moves in the short term, right? So, if I'm a 3-minute chart scalper, maybe I will see a little bit more violent moves as algos start to filter into the markets and into my market in particular. Maybe. And now, I don't know if that's necessarily a bad thing. It probably depends on the way that, the style of trading that I use. However, I would argue that even if, 90% of the market is flooded with algos in terms of the higher time frames or the swings in the market and those sorts of moves, I don't really see how that would make a difference in the way that I trade and a lot of traders I know. You know what I mean? Like, I don't see how an algorithm, because most of them are high-frequency trading algos, or at least that's how they've been characterized in the media. So what that means is the bulk of the moves that they influence are going to be those sort of micro moves, right, in the shorter time frames. And it's not, while it might give a little bit push to the daily range, how fast it can accelerate in the range of the day, I don't really see how it can change the moves that I trade, you know what I mean? And so, I don't know. I mean, there's a lot of good things about the liquidity, the fact that, you're able to get in on tighter spreads because there's so many more trades. I saw a stat the other day that in 1 year, the amount of trades in the stock market, I think this was in London, and this was back, when algos were just starting to come into the markets. They said that the year prior, all of the trades done in the whole year were done in 1 month the following year, because of these. So that's going to really improve liquidity. That's probably going to pull down the spread on a lot of markets. So I think there are a lot of good things about this. The only real weak spot I would see is that if I were a low time frame trader, if I was some sort of scalper, then I might be concerned. But again, I might also see that I can get a chunk of bigger moves perhaps, whereas maybe before I had to wait a little bit longer. Now that the algos are here, maybe it pushes the market a little bit, gets a little bit more slippery, I guess, is the one way to look at it. But I'm not sure about that. So I don't really see how algos are going to affect those guys who sit back and look at sort of the swings in the market, if that makes any sense.
Yeah, I agree with you. I think it's, a lot of people want to trade with a very tight stop. And, they want a high win rate. And I think if you're trying to achieve that, on the lower time frames, then this high volume of short time frame trades are probably going to make that nearly impossible. But I think traders who perhaps use the longer time frames, who given their positions a bit more room to move, or if they are using a tight stop loss, they're at least letting their trades run. So although a lot of them are going to be taken out, the entry level, the few that win are going to cover those losses. So I think the sort of tried and tested approaches to trading still hold true, but people are attracted to this short time frame, tight stop, high win rate systems, and I think perhaps algos are just going to make it harder for them, because if you watch certain levels very closely, price always tends to sort of push through before it returns, and these are the places people want to put their tight stops, and I imagine a lot of them are getting taken out and struggling because of that. But when I look at the markets, they don't seem to be acting any differently to charts from years ago. So I can't see any visible change to the way markets move, really. And I think that's because they've always been controlled by humans, and they still are, really. Even like you say, even the algos, they're based on humans' feelings and perceptions of the market. So I don't see it as being a problem or changing the market.
I mean, that's it. That's the bingo right there. You hit it. We're still humans. We're still humans in the markets, and that's kind of the deciding factor here, is what's making the market move are our human decisions. So, and the other thing that I just wanted to point out is the algos have been fingered as the dirty trader in the room ever since 1987, as far as I know. So this has been going on for 30 years. So people who are new to trading and worried about this, I think that it's important to remember that this is not a new thing. These things have been in the markets for 30 years, at least, maybe longer. And so it's not something that I would say is a concern, and unless you're one of those people who's bent on trading the lower time frames, and then it's only a possibility that it might be affecting you. So I don't really see this as a bad thing. I think that ultimately we're going to see tighter spreads, which is essentially the equivalent of lower commissions for most traders in Forex. So I don't really see this as a bad thing at all. I just think it's and maybe it will push some traders away from, lower term scalping to the higher time frames, and I think that's a great thing too. So yeah, so I don't really see this as the big bad guy that a lot of people are at the moment. Could be wrong, but this is something that I think isn't really a concern. In fact, I think that if it does, there are some reports out there, and usually these are government reports, and I usually don't put a whole lot of value in what they have to say, but basically we've heard things like it may be that the algos make it easier for the markets to go fast, right? Now, as a trader on the higher time frames, let's say trading the daily charts, let's say, if the markets go really fast, that's not usually a bad thing, right? I mean, if it goes fast and hits your stop, okay, so be it. But if it goes fast the other way and goes towards your profit target, I don't really see that as a bad thing. So I just think this is another case of people blaming technology. When the trains came about, do you know the story about the trains, Darren, and how the doctors were warning people not to ride trains?
I remember saying briefly about it. Remind me, when their head's going to explode or something.
Yeah, they were
equivalent 30 mile an hour.
Yeah. So the doctors were concerned that if they went over 20 miles an hour, that people would suffocate on the trains because you wouldn't be able to breathe with the air moving so fast and that sort of thing. So these are things that pop up, and people are concerned about technology, and I think it's a healthy concern, but I don't necessarily think that's something that traders should be worried about. So my general feeling on these algos, and remember, algos are simply ideas put into code, human ideas put into code so that they can be executed faster than the human can. So there isn't really much, I think, to be worried about here. So that's really my take on it, Darren. Do you have any final thoughts?
Yeah, I agree with what you say, Walter. I think just we all believe, like you say, with technology, that the more complex something is, we seem to think that that's got a greater ability to achieve its goal. And I think the reality is that the more complex you make something, the easier it is for it to move forward. So it becomes more fragile, the more complex you make it. That's Nassim Taleb's one of his ideas. All of his ideas are brilliant, and that's one I think really rings true. And I think just keep your trading simple and don't try and complicate it. It doesn't need to have some amazing mathematical formula. There is no sort of secret code to break. So I don't think we need to worry about algos. Just keep it simple, and and then it should be all right.
Thanks, Darren, and we'll see you next time.
Okay, thanks, Walter.
See ya.